Hey guys, so I'm going to walk you through the strategy that I've been using. I developed the strategy, and it was based off of me constantly doing reversions. And essentially, reversions. One of the easiest ways to find a reversion is this. This is a perfect example of a reversion. You're essentially getting a wedge, right? And how do we identify a wedge? We see a run up, right? And then we see a push. And the push closes higher or below if it's bearish, right? Or not closes, attempts, and closes back below this. So now we can see that it's made an attempt, but there's seller interest up here. So how do we trade a reversion? All we're going to do with a reversion trade is look for 3 touches, right? 3 line strike, 1, 2, 3, right? This is viable for a reversion. However, how can you time a reversion to get the best risk to reward? And that's the difficult part. And why I continue having issues is because when you wait for something like confirmation, you go, okay, well, this is creating a wedge. It's obviously getting battered down every time it pushes. So where do we get confirmation? We could essentially say that we have structure here. So once a candle closes outside of structure, we can anticipate that whatever structure held previously, right, which is here, right, not the wicks, but the closure here, this can be where we put our stop. So when we see a candle close out of this, or at least come out pretty aggressively, we can presumptuously enter. Now, here's the problem with this. Reversions get tapped out so often. And what I was noticing when I was creating this strategy is that I was constantly catching these bounces, and they would just end up being shit. Your risk to reward needs to be worse. Right? You need to have a longer stop. You get stopped at more frequently. And why? Because we're just stepping in front of a moving train, essentially. So what I do is I open up and I go into 1 hour. And between 9 a.m. and 11 a.m., I'm looking for trades. I enter the market every morning at about 8 a.m. EST. And essentially, this is what I'm looking for. There is no structure here. What I like to see is structure coming down and then an obvious pivot. So we have structure coming down here, but I would look for an obvious pivot around here. We see an aggressive candle moving up into structure. Once this candle stops and cools off, if it had pulled up to, let's say, here, these tops, and then pulled back, I would anticipate that during the pullback it would find ground, it would reattempt to hit the just made highs, and either put in a lower high in reverse, a double top and reverse, or fill this gap. Now obviously it didn't do that. What happened is it went right through, and then we got the pullback. All right, so now if we're going to trade this, we need to find structure on the left. So let's go to the day. And where do we have structure on the left? Where do we have legitimate structure and structure closes? Right? Now, this is quite easy to find. And what you're going to look for, what I look for, are the candle closes here. Something like this. And then I also want to find confluence with wicks. Now, I like to be intelligent about this. I'm not going to target here or here. What I'm actually going to look for are candles that mix like this. And these are actually my entry triggers on the 1 minute. Doji candles, indecision candles. We have a small body buying, selling. Right, so I'm going to target here. I'm anticipating that this is where the sellers will step in, right? Because we have selling, selling, selling. Every time it comes in here, it sells. So where are the last gaps? The last gaps are these candles and this candle. Okay, so my gap target is going to be here and here. And as we move in to the 1 hour, when we're walking into this, we go, okay, so we have this little bit of structure here. It's moving aggressively. Once this pulls back, where is it going to attempt to go higher? And that's where the strategy comes in. So essentially what we're looking for, the momentum strategy. We want to see a 1 hour candle close or approach a previous structure with a gap above. We're going to anticipate that it's going to pull back and either attempt to go higher or it's going to reverse. Probability says it's going to go higher. So if the candle closes here, we anticipate that during a pullback, it will at least make one more attempt, right? Because how often does it happen? How often do you get stopped out trading reversions? That's the theory behind it. One more attempt. So we're going to find that aggressive candle, we're going to follow momentum, we're going to look for entries, and we're going to target the highs made on this candle, and we're going to target gap fills. So immediately I will go down to the 5 minute. And I'm going to look for a run up of structure. Right? And this will constantly look different. So on the 1 minute, we have an aggressive run up. Right? We can tell that it's attempting to at least fill this close gap, and it might potentially push up to the daily gap. So how do we target this? How do we trade this? As it moves in, we can take a trade anywhere in this, but essentially the safest way to structure this is find the break point. The break point is here. The beginning point is here. I don't usually draw these out, but I'm going to do this for you guys. So this is the 50-point Fibonacci. My back testing shows me that if it goes through the 50 Fibonacci, we are going to experience more of a range and the probability drops, but you can still get a good risk reward. If it comes down to the bottom of the range and it holds, it's okay to take a trade, right? Because our risk reward is great. When I'm taking a trade, I am anticipating that even though we had this really good run up, if it pulled back the next hour this deep, there's a possibility that it will come back up here and then dump. We can still take a trade looking for those entries, but preferably this is sort of where I lose interest in the trade. I want to see that it actually holds above this. Now from there, how am I going to trade this? I see that there is a break of structure, right? But we're anticipating it's just a pullback on a small time frame. So what I like to look for are order blocks within. Now, this is hard to find sometimes in the one because you get a lot of these little candles like this, but essentially what I'm looking for is I'm going to look for areas of consolidation where there are small body candles and a lot of wicks. In the following candles, I want to see an actual order block. Right. Essentially what we're looking for is indecision, direction, correction, continuation. And the reason that I look for this is because this seems to be the highest value entry points. So we wait. This looks like it might break soon. Okay, now we have a break. Where did this have the majority of the volume generate from? Right, we obviously got a lot from here. It moved up, it corrected, it created an order block. Okay, right, we have a lot of volume here. It corrected off of it, continued. I'm going to draw this whole area out and say that no matter what, if this volume is to continue, this area needs to hold. This was the order block. However, I would be willing to take entries higher up as soon as I get confluences. I would like to see a deeper pullback somewhere into this area. Why? Because we had a lot of buying, we had a correction and continuation, we had a correction and continuation. So there was buying interest in here. As soon as it starts to move down into that area, I'm going to anticipate that we can buy and we can put our stop below. But I have to look for confluences. This didn't break out. Instead, it actually formed another order block and continued. So I'm looking at this candle right here, this doji candle that it respected. Right? But again, this also printed an order block right here, and we have confluence here and here. A big order block here, and then we have the break retest area. So if it breaks out and moves into this area, I'm going to anticipate that we can get strength to the upside, and now we will look for confirmation. So it broke this area. We're looking for confirmation. Okay, now I have confirmation on this candle. Right? Even though we have 3 black crows here, I'm still anticipating that we have enough strength to continue higher. So we can take a presumptive position here, and this is how you need to structure the trade. I will risk a massive area, but I will risk 1%. Now, if this was to pull back down into here and give me more confluence, I could be tempted to add, but then I would make sure all my stops, once it confirms and starts moving my direction, are at the bottom of that brand new 1 minute pivot. So I'm going to enter right here, and I'm going to put my stop here. And we're going to target the highs for a break, and we're going to target the gap. We've already established that the gap is here. Okay, so at this point we get an aggressive move up, and I'm going to take partials off right here, and I'm usually going to move my stop to break even. So stop now is at break even. So we have secured partials here. What was our risk here? If we were risking 1% and we were expecting it to come up here, right, we would be at $500 at this point. So we could feasibly take off $200 or $300 and move our stop to break even. Right. And here's the great thing. A lot of people say, oh, well, the risk to reward here is shit, but it's not. The reason it's not is because we're presumptively entering a position, but we are able to move our stops aggressively up. Why? Once structure confirms that it has continued the uptrend in this, i.e. we get a test of the highs and a break, that's telling me that we are confirming and we're going higher. Now I can move my stop to recent support, right? Or even up to this bottom of this candle. I am anticipating that this needs to at least hold. So now that risk to reward changes. Now this is a 3 to 1. Or I'm sorry. This is a 2.3 to 1. Right? Now in the event that we had lost this trade, we would have lost 1%. But now our risk is mitigated. And now we're risking, what, $200? And we're targeting the gap. And now this is a 7 to 1 trade. Right? And this is the recent gap. So let's look at our recent gap and our daily gap. So we have the recent gap that was made a few days ago. We can take profits here, we can take profits here, and then we can, of course, target this. Once we move into this gap, we're going to move our stop to break even. Right? And what happened? We hit the gap, we reversed, we got stopped out for whatever remainder it was. But still, there are times where you don't get stopped out, and it does go up, and it does fill this daily gap, almost. The same thing happens over and over and over and over again every single day. All we have is volume moving into a previous pivot, and we're anticipating that it's going to attempt to continue, at least attempt. So on any pullback, we can buy, and we can anticipate that we get a lower high, a double top, or a continuation. Let's see what gold did today. Alright, shit candles, I wouldn't trade that. This is great. This is actually textbook. So we're just going to remove all the drawings. What candle would we be looking at? Alright, 6 a.m. I wouldn't have been awake for this. But let's just use this as an example because this does happen between 8 and 9 a.m. quite often. Big candle. Where are the gaps? It's already broken through this gap. Now we have these highs. See, now it's makes it a lot easier to visualize gaps. And then what do we have here? We have a perfect order block, right? And then we obviously have the absolute highs, right? I don't like to target absolute highs. I feel like they're very presumptive and it's just not intelligent. Instead, I'm going to target the body close and the wick, right? Why the body close? Because this was the very top of the move. This was the retest, and the wick closed here. It printed another wick here. So what this is this is the beginning of the move started here. It reacted off of this high, and it retested here and gave us a hook. So the primary gap that we would be testing is here. And obviously, hindsight's 20/20. You can see that it worked out. So what are we looking at on this candle? We're looking for a break structure on the 5 minute or the 1 minute. All right, aggressive run. No break of structure. So we go to the 1 minute. Now we've moved into the gap, and we're anticipating our only real possible entry here is that we get a continuation to retest this gap. That's presumptive, and it's honestly kind of sketchy. Because we don't get a big, really good pullback here, we're anticipating a quick continuation, a quick move up. And the reason I say that is because it's just consolidating in this area, right? So if at any point it breaks this and closes back into the area, then I would have confirmation, which we get here. Why is that? A lot of the times when you get a directional move and it ranges at the top bit of the move, what you'll notice almost every time is that the range goes like this, and then there's one candle that goes just below it, and it wicks back up. And I would say 90% of the time, that wick ends up being the absolute stop for the rest of the move, and then we get a measured move up. All right, so we could take this, we could say our target is here at the 1. But obviously moving into a really big bearish cap. So we don't want to do that. We don't want to target that. But we can anticipate that it's making a move. How do we trade this? Right, with such a presumptive position. We can see that it's ranging. We see that it created an order block here. This could be our absolute low. What did it do? It came in and interacted once, twice, closed back into the structure, and it started to print a green bar. We could easily take this trade and just put the stop here and target the gap. Right? And what happens? We immediately get this great run. We're probably up about $1,000 at this point. We can easily close this out. Right? This isn't a trade that's going to make you rich one time when you do it, but the fact that we've gotten, if we're risking 1,000 here, the fact that we've gotten 3,000 within just a few minutes, right? In 11 minutes, you can make $3,000 here. So yeah, this stuff happens constantly, and that is how I trade. So that is pretty much the strategy, all run down. Let me give you one more example. Usdcad, 30% today. No, NZD, USD. Okay, right. This is another great example. It's a great example because this is what happens quite often, right? You get one little push, it doesn't make it as high, and then it reverses. So we're getting a push up into critical levels. We have order block here, right? And then we have the gap here. So we can target this. So we go down to the 5 minute. We see a breakout, right? How can we possibly trade this on a 5 minute? There's nothing here, right? And by the time you get confluence, you're already reversing. But here we have an obvious attempt. So you could say, and this is a way you can trade it, that here's the top of the move, and here's the bottom of the move. Because it moves so aggressively into the order block, the bearish order block, we can anticipate that it will make one more attempt. And the rule book states that whatever entry we have, our targets are going to be a lower high, a double top, and then a gap fill. Okay? So we always want to assume that there might be a reversal, so we can always target a lower high, because there generally is one. So where's the structure? Where's a confirmation entry point? We see a pullback, and we see confluence here. But we also see a flag pattern. Right? Not every attempt has to be the first one, but we want to give it room to breathe. So I'm going to allow this to pull back 50%. If it pulls back past the 50% mark on such a fast move, there's no reason for me to enter. Right? I get confirmation here. I'm just going to go ahead and take it. I would probably take it on this candle. Excuse me. So we're just going to put our stop here, and we're going to target for a lower high, and we're going to wait. Right? It starts to sell off. Do we get another confirmation? Yes, we do. We got one right here. So now what we can do is we can average into this position anticipating that because we created this support here, and it's obviously reacting to it here, that on this entry, what can we do? We move all our stops up, right? And we still are going to target this higher, this lower high. So now we have a 1.2 and a 3.21. So if we're risking 1,000 on this, we're no longer risking 1,000. We're risking about $450, $480, because it's a 1.2, and we're only risking a very small amount on this, maybe $400 or $500. So we're still probably risking less than 1% on this trade. Now, if we entered here and we entered here, as these trades move into this area, we have the ability to get out 75 to 80% of our position for a profit, and then we move our stops to break even, which at this point is here. Turns around, stops us out, reverses. So let me show you the trades I actually took today. So CAD CHF. We had a rundown, and I was anticipating that it would fill the gap that it had left behind. So as price moved down, pre-market opened 8:30 a.m. Right? It had a rundown. Okay. So I entered here and I put my stop above this pivot. Right? It went against me a little bit and it reacted with this pivot and it continued lower. So my target is that it's going to put in a lower high, which it came down and it did. Right? I obviously took positions off here and then I stopped to break even. Why? I don't know. That was a little bit too soon, but that's what I did. And then I got stopped out here. So for history today, my profit was $1,135. The bigger trade, the one I monitored more, exact same situation. I got stopped out because I put stop losses in, and for some reason the spread stopped me out really fast. But essentially what happened is we had, again, a move down. I'm anticipating there's continuation. Where do my stops need to go? My stop needs to go above this red bar close. So as this moves up, I take an entry here. Or was it here? Okay, and I take another entry here as we start to pull down again. I'm going to target here, which I got out a little too soon. I need to practice this. Right, and then I anticipated a total gap fill down here. At this point I move all my stops to break even. Right? Sell 5, sell 5, sell 5. These are scalps from last night. So these are the two spreads that I got slipped out of. CAD CHF, USD CHF. So this is what I was looking at. Right, market opened, and I see this push. What is it doing? It's taking out these lows. Right, where are the next gaps? Right, we have candle closes here, right, and then we have the order block here, here, and then the bottom wicks. So I have 4 potential targets, but of course my first target is to get out of this trade once it makes a double bottom. So this is what I see. Now I'm looking for structure to break and an entry. So we have our rundown, right, we have a move up and pivot and a continuation. And then again, move up, pivot, continuation. So I am anticipating that once this cools off and it makes a retracement, I can find a way to enter. And what does it do at 8:30 a.m.? We get this dumbass candle, which just ruined my day. Luckily, it continued lower, giving us a better risk reward. So now, wherever this breaks, I can anticipate it's going to pull back somewhere in here or in here and continue to the low side. As this comes in, have an entry, right? The candles are getting smaller and smaller, 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 and we're expecting a reversal, right? So we are going to put our stop above this, anticipating that we can get out here as it retests the structure, where it will either continue higher, break and do a double bottom, continue higher, or fall for the rest of the day. So as these candles close and start to move down on the 5 minute, I said, this is a pretty good pivot. I'm going to move my risk down. So initially it was here, above these highs. So I move my risk down, right? And I closed out here on this pullback, I believe, right? And what did it do? I had a little pullback, and then continue higher and stop me out. And now look where it is. So these are a lot like those chocolate frogs in Harry Potter. You get one good bounce. After that, I'm not going to retrade it. Occasionally I have, and I've noticed that the probabilities drop a lot. Especially when you get this V shape. This V shape, 9 times out of 10, is a head and shoulders. Right? If this comes aggressively back up anywhere close to this pivot or breaks it, that's telling me that we're going to get a head and shoulders pattern, right? So how do we trade a head and shoulders? This is the only reversion pattern I trade. Anytime you start to get aggressive volume moving up on that final shoulder, on that right shoulder, you can enter and your stop is below the head. And where do we get volume? We get a volume candle here, and thankfully it pulls back down and it prints a beautiful little order block here, which just gives us an awesome entry. Alright, so we're going to put our stop here, and we're going to anticipate that this is going to break the structure here, and it's going to continue up and potentially retrace the entire day all the way back to the beginning of the move, which could be somewhere in here. Right, so we get this order block entry right here, and then 5 or 6 minutes later we get this really great confirmation candle. At this point I don't really need to be risking anymore, so I can just move my stop to here, and I can take partials whenever I want. Where would you want to take partials at? You have structure, structure, structure. So I'm going to take partials here, here, and here. So this already today would have been another great trade to take, although I missed it. Alright guys, if you like the video, like, subscribe, send me a message. I'm just starting this channel. I started trading about 3.5 years ago, and it's been a really rough journey. I've done it pretty much all on my own. I even quit my job and moved abroad for 3 out of those 3.5 years and just traded all day long, studied, back tested. I've logged about 10,000 hours, and I'm finally becoming profitable. I'm still demo trading. I'm still doing funded challenges, and I'm passing the funded challenges. I haven't been able to keep an account yet. My big problem right now is that I over leverage too often, right? So that's been my big thing that I've been working on. But, you know, full transparency, this is a thing that we're all in together. And if it was easy, everybody would do it. You know, there are a lot of people out there who are serious just like me, and maybe you're just starting out. And one of the things that really won me over with trading was Tim Sykes, the penny stock millionaire. You know, the guy is just kind of a goofy oddball, but he took so much time out of his life to take all the trading profits and build schools and give back, and it's just such a Robin Hood story. And I just thought that was so cool. If you could find out how to make money and take money from the banks and institutions and then just build a dream life. You know, and of course you need to get disillusioned with the whole overnight success thing, because that just doesn't happen, right? You're not going to be the outlier, and even if you expect to be a millionaire in a year, it's just not going to happen. Like, if you were ready to be a millionaire, then you would know it, right? Because when you take a trade and you're risking $500 and you're a new trader and it's your money, it's going to sting when you lose that. But millionaire traders, they're risking, $50,000 a trade. Can you stomach that when you've been trading for a year, 2 years? No. So just be patient with yourself, Risk $200, risk $500. Trade funded accounts, right? Where you're only risking the money that you put up for the account, because you can recover from that. You don't need to be going all in, balls to the wall, day one. Give yourself some runway, right? Because it's going to take a long time. It's going to hurt. You're going to have repetitive failures, and it's going to be heartbreaking, But just keep moving forward. And hopefully, my few years of intense practice and back testing and expertise can help somebody else maybe move it along a little bit faster. So until next time, guys, once I start growing and getting traction with this channel, maybe we can do Q&As and better videos and live trading and stuff like that. This is just, it's a business I really want to get into because I'm super passionate about this. And my wife and I are planning on moving back to Bali, where we met, in the next couple of years. And, this is just like a fun project that could end up turning into a little bit of a business, Maybe I get some money from YouTube, which would be awesome at some point. But yeah, this is my life. This is my passion. I absolutely love trading, and I know a lot of people out there are struggling. So someday I'll get a camera so you can actually see my face. Until then, whatever.